I just want to touch base with you on that, and if they win on Sunday, I'll call you.
This is Alan Bush with ADMIS with the Daily Financial Forecast for Tuesday, September 29th. In the stock index futures, we are seeing prices higher this morning after the Reserve Bank of India lowered interest rates by 50 basis points. This was a surprise move since most analysts were expecting the RBI to lower rates by just 25 basis points. So we are seeing a tendency for various central banks around the world to lower interest rates. Recently, we had the Central Bank of Norway cutting rates. We also had Taiwan Central Bank cutting rates. But the Fed seems to be rather set in their ways as far as talking about the possibility of raising interest rates later this year. In fact, several Fed governors over the last couple of days saying just that the central bank here in the U.S. is on track to raise rates. So that is doing some damage in the short run to stock index futures. Yesterday we had a very severe decline, some of that linked to hawkish comments from Fed officials. However, longer term, I think the stock index futures will work higher, especially into next year, and I think we will see some very strong gains in 2016 as more central banks lean toward more accommodation, and I think the Fed will be forced to be less hawkish in their commentary and in their policy. Now, moving over to the foreign currencies, we are seeing the dollar index, which was higher in the overnight trade, now trading lower, even though we did have the consumer confidence number coming in stronger than expected. So the dollar index underperforming the news, which could be viewed as a sign of weakness for the dollar index. Also, we have the yen trading a little bit lower as flight to quality longs are being liquidated in light of better stock index futures and firming crude oil prices. Also, the pound a little bit easier, even though we did have some economic data out of the UK coming in a bit stronger than anticipated. Now, moving over to the interest rate futures markets, we did see a 5-week high taking place in the 30-year bonds in the overnight trade. Some profit taking coming in more recently, but then now I'll move back to unchanged as the global economy continues to stagnate or at least not grow as much as many analysts had anticipated earlier in the year. That has to be viewed as supportive to the interest rate futures market, especially at the long end of the curve. Also, our feeling is that the Fed will not be raising rates this year. And I think they will be hard-pressed to raise rates in the first part of 2016. So with a very subdued rate of growth in the global economy and the Fed likely to remain on hold, it looks like the long end of the curve will probably remain well supported and higher prices appear likely. So, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.